What's going on, guys, and welcome to today's YouTube video. In today's video we are going to discuss two trade setups that I took on both Bitcoin and Ethereum yesterday during the CPI data release. Both of them played out very nicely, and I charted and analyzed both of these setups during yesterday's live stream in our free Discord server. If you want to join the Discord server, make sure to check out the link in the description down below and make sure to join the community right there, doing a live stream every single week. Now, I charted and analyzed this setup yesterday during the stream, but a lot of people were still wondering what was the reasoning behind both setups, because I couldn't be there. So in today's video, we are going to exactly discuss how I did my analysis and how the price moved. So over here you can see the profit screenshots for the Bitcoin trade and for the Ethereum trade. I already fully closed out the Ethereum trade. The Bitcoin trade is still running for half of the size. Now, first of all, let's discuss Bitcoin. We can see that Bitcoin was ranging here after getting the breakdown out of this previous range, and I was looking for a third drive into the resistance. So we had our first sweep over here, and now we can see that after this first sweep, Bitcoin swept this low over here and we started moving up. Okay, so this was definitely a sign of strength, and I thought, okay, with the CPI data release coming, there's not a chance that we are not going to sweep this high where there was a lot of liquidity resting above. So I knew that I was going to look for potential shorts above this high. This was a huge liquidity pool. It was also getting into the previous consolidation area before we got a drop off towards the downside. So that was definitely an interesting area to start looking for some shorts. On top of that, what is always very important is that you want to have a draw on liquidity towards the other side of your trade, because you need to have a clear target. These lows were big draw on liquidity. Why? Because if we zoom in, we can see that we have a huge Darth Maul candle over here. That means big wick at the top side, big wick at the bottom. And usually when the top side gets filled, the bottom side is the next draw on liquidity. So I was thinking, okay, maybe we sweep the high and then we go down to fill this wick and to take out these equal lows, in which we also have this Darth Maul candle over here, where we spike towards the upside and then spike towards the downside. The upside got filled, the downside is yet to get filled. So the draw on liquidity was there for both the upside first and the downside afterwards. So I was looking for a potential entry point. And for that entry point, I wanted to go onto the lower time frames, and I wanted to go back to the previous drop off, which occurred over here. Now, zooming into this area, thinking like the common retail trader, what was the retail trader thinking? They were thinking, okay, this piece of price action over here is where we got this drop off towards the downside, right? So people that were shorting over here either put their stops over here, but the retail traders that think, okay, I'm a smart guy, thought, okay, I'm going to put my stop above this drop off, right? Targeting this low, that's still a decent RR. Now, you always want to enter where retail is putting their stops. So that's above this high, but on the lower time frames, I could identify that above this high, where this drop off occurred, was also a lot of liquidity resting. Now, the interesting part is that if we go onto the 4-hourly time frame, we can see that above that piece of price action that I just marked out, we have this hour 4 fair value gap, right? A bearish fair value gap, because red candle followed by another red candle, leaving behind the bearish fair value gap. Now, that hour 4 fair value gap, again, on the 15-minute time frame, like I said, is aligning with the buy side liquidity that's resting above this lower high over here before we got a drop off. And on top of that, I could also see that over here is where we found support after this move towards the downside, bounced up. Over here, we wicked another time into the support. And if we zoom in, we can see that over here, we created this M15 level of resistance, consolidated below, and then we got a drop off. So in my opinion, this is the key piece of price action, okay? Now, on the 1-hourly time frame, what was very interesting to me is that if we take the fixed range volume profile of last week, so that means starting at Monday of last week, like this, dragging it all the way towards Sunday evening, midnight, like this, and we drag it, we can see that our point of control is exactly aligning with our area of interest. So if I go back onto the 15-minute time frame, what can we see? We can see that our point of control is exactly aligning with the piece of pricing that I was looking at. So a lot of people are looking at this area. I was looking a little bit higher also because we have that naked point of control of last week's volume profile aligning with our area of interest. And we got a beautiful sweep of the high over here before we got the drop off. Okay, so we swept the high, broke structure, and then we dropped off. So we also have a very, very clear invalidation above this high, because that is the piece of price action that brought us towards the downside, and that is also the piece of price action that you want to break through in order to shift bullish again. So that was our invalidation point. We wanted to enter above the buy side, and we wanted to enter when we tapped the resistance into the hour 4 fair value gap. So very clean setup over here, entry over here, stop above the high, target, very clear target over here. Like I said, first target was actually this low that we put in around the Asia session. So that is where I took my first profits, which was already an RR of 3.66. But I'm ultimately targeting this Darth Maul candle for almost a 5 RR and this low over here for almost a 6.66 RR. So now let's see how this trade played out. Let's speed it up a little bit. We wigged into it. Beautiful during the CPI data release. And this is where it gets interesting, right? Because a lot of people tell me, Guru, why do you trade during a news event? And I always tell my people, a news event doesn't change the price action. It doesn't change what is happening on your screen. The only thing that a news event does is speed up the price action. And that's something that a lot of people do not realize. In the meantime, let's exit this replay. Right now the trade is looking something like this. So after the first day profit, we are bouncing a little. Second day profit is over here. Third day profit is over here, but already a beautiful, very profitable trade for me. But coming back to the part where I was talking about those news events, they only speed up the price action. They don't change it. And it is something that can be traded. Obviously, you do not want to market enter around the news event. You only want to set some limit around interesting areas. Look how beautiful it wigged into this area over here, exactly as I explained. And that is something that I need to get into your guys' minds. Like I said, you don't have to necessarily trade. If you don't feel comfortable, then don't do it. But I just wanted to say to you guys, the levels still get respected. Now let's quickly move over to the next one, which is Ethereum. And something that was interesting me a lot in this case was that Bitcoin was going above this high, but Ethereum did not have the strength. As you can see, Ethereum was forming a lower high while Bitcoin was already close to breaking this high. So what does that mean? It means that we are forming an SMT divergence. When Bitcoin is forming higher highs and Ethereum is forming lower highs, that's what we call an SMT divergence. And it's a sign that the market is potentially looking for lower levels, that the market does not want to continue upwards. So for Bitcoin, I was looking to short from higher, but for Ethereum, I was actually looking to stay within this range. We beautifully swept this high over here, and that sweep of that high resulted in this break of structure, and we had an untested piece of price action around the area over here. So this piece of price action was not back tested before we dropped off. So that was also the piece of price action that I wanted to look for shorts on. We had these equal highs over here. There was a big inducement of this supply area. And if we go onto the lower time frames, onto the 5-minute, and I zoom back in, what can we see? Also for Ethereum, we had some buy-side liquidity resting right below our area of interest. With this lower high, this drop off towards the downside, that could be an area where people were going to put their stops. So they were either going to put their stops over here, but now that they see these equal highs, they might think, okay, I'm going to put my stops above this high. Okay, so thinking within the mind of the retail traders, I was saying to myself, okay, I want to look to enter once again where they are going to put their stops. On top of that, we have an unfilled imbalance on the 5-minute time frame over here, and also on the 15-minute time frame over here. And something that you never ever want to do is to put your stop loss within an unfilled imbalance. So on top of that unfilled imbalance, we had this M15 level over here. And on the 5-minute time frame, we can see that we have this M5 level over here. Okay, so 2 untested levels with buy side liquidity resting below, beautiful sweep, and looking at the draw on liquidity on Ethereum was massive in this case. Okay, so we have all of these equal lows lining up over here as a beautiful draw on liquidity, but that's not it. Also, Ethereum created this Darth Maul candle, even bigger compared to Bitcoin. The high of the candle now got swept, as you can see over here. So what should be the next draw on liquidity? The low of the candle. But the low of the candle is also forming an equal low, which means it's an even bigger draw on liquidity. So this was all lining up so beautifully, and I was not letting the news event getting this trade out of my mind, right? I was just sticking to my plan in this case. So looking to see a sweep of that buy side liquidity into our area of interest, into our resistance area, stop above the high, targeting this Asia low, just like for Bitcoin, as our first take profit target for an A3 RR trade, and then we were targeting these equal lows over here. Now, just like for Bitcoin, let's quickly see how this trade played out. So let's put it on 10x. Just look at this, guys. Look at this, how we got filled. And this is what I call price action. This is a fill to the cent accuracy. This is crazy, right? And this is the beauty of price action. And this is why I'm telling you, don't let the news event get these kind of trades out of your mind. Beautiful here, I take profit target, and I actually closed all of the trade around this area because I didn't want to round trip any profits, and I still got half the size of the Bitcoin short running. Now going back to this trade, let's see. Here are the profit P&L screenshots, as you can see over here. This is Ethereum, and if I quickly zoom out, this is Bitcoin. So beautiful trades, fully explained. I hope you guys understand. Important is to always have a draw on liquidity. Important is to always look for untested levels. And very important is to always get inside the mind of the retail trader, because you want to enter where they get stopped out. Now, if you guys do have any questions after watching this YouTube video, please let me know in the comments down below. And like I said, make sure to join our free Discord. The link can be found in the description down below. I thank you guys for watching, and I'll see you guys again on Friday's video. Ciao, ciao.